What if the stock you're holding right now is being valued less than 2% of where it could end up going? Because that's a thought that's kind of been stuck in my head for the last 48 hours. And I'll tell you why. It's because of this thread that kind of went viral on X or Twitter. Elon actually replied to it and essentially said, yeah, it's not impossible. So we're talking 100 trillion on Tesla, not 100 billion, which is past, not even a couple of trillion, 100 trillion. So that's, I think, like 65 times where Tesla currently sits. And as I sat down, I actually ran the math on every single layer of this argument. Some of it checks out more than I actually expected. Some of it we will talk about. So if you're the kind of investor that actually wants to understand the bull and bear case, not just hit subscribe, you're not going to get this breakdown anywhere else. So let's get into it. So if you don't know, here's essentially what happened. A guy named Akash Gupta, he's this product and tech guy basically on X. He posted this thread breaking down layer by layer how Tesla could theoretically reach a $100 trillion market cap. He stacks up 4 different business layers on top of each other, each one massive on its own, and goes through the math. Elon, obviously, this part that blew it up, actually replied and said, okay, and I quote, obviously a staggeringly enormous amount of work and good luck is needed for such an outcome. I'm just saying it isn't impossible. So now let's be clear a little bit. Elon didn't say, yeah, we're going to go to 100 trillion. He said that it's not impossible. But for the CEO of a $1.5 trillion company to look at a 65 times per year projection and not laugh it off tells you everything about how he sees the roadmap ahead. Because Tesla right now, as of today, I mean, sitting at $411 a share, roughly a trillion market cap. When we talk about $100 trillion, we're talking about a share price north of $25,000 per share. Like that's the scale of which we're looking at right now. So let me walk you through the 4 layers of this argument and give you the bull case numbers. And then I try to obviously, always be fair. So I'm going to give you the bear case too. Layer number 1 is the robotaxi, right? That's the first layer and obviously the most important one right now. It's the most important one, I think. Well, at least in the next immediate future. ARK Invest projects the total addressable market for autonomous ride-hail around $10 trillion by 2030-ish, right? That's the global total addressable market. Now, the thread argues Tesla captures about 30% of that market. So at 13 times price to sales multiple, for which, a high growth software business, like that's not crazy. That gets you to about a $40 trillion market cap on robotaxi alone. So my take on that is this. There's 3 things to think about. First, the TAM. 10 trillion for a ride hailing is massive. It's not just Uber and Lyft getting replaced. It's the entire concept of car ownership at that point getting replaced. So if a robotaxi can pick you up in about 3 minutes for a fraction of what it costs to own, insure, maintain a car, a lot of people will just stop buying cars. Like that market is enormous. Let me know in the comments if you agree with that. Second, Tesla's advantage. And this is what I keep coming back to. Tesla has these millions of cars on the road already collecting the data. Every single Tesla comes with training with its neural net. Waymo has what, like a couple thousand, I should say, vehicles pre-mapped on the streets with expensive LiDAR rigs. So that's fundamentally unscalable. But Tesla's approach, pure vision, of course, over-the-air updates to millions of vehicles simultaneously, that's how you actually capture a global market. So the bottleneck at this point isn't the tech, it's the regulatory, and all Tesla bulls know this. Third, the issue. The 30% market share assumption, like this is where I push back a little bit. 30% of 10 trillion is aggressive. That assumes Tesla dominates globally. China, Europe, everywhere. We know China has its own players. BYD's already outselling Tesla, I guess, on global units, if you want to call it. Some murky numbers there. So the realistic number probably is between 15 to 25%. But even at 15, that's still 1.5 trillion in revenue and potentially a 20 trillion just from that value of business. So layer 2 is Optimus, and this is where it gets really sci-fi, but also really interesting from an investor standpoint. Morgan Stanley has the humanoid robot TAM about $5 trillion. Okay. Citigroup has it around 7 trillion, something like that. So the thread lays out this path where Tesla gets to 100,000 units within 60 months, 5 years. So it's about 25K per unit of humanoid robot. So that's 30 billion a year in just revenue from robot sales. If you look at global labor compensation, meaning what does it actually pay? What do humans pay for other humans to do work? It's about 40 trillion a year. So if Optimus captures just 5%, that's 2 trillion in annual revenue. Put on like that 13 multiple on that, like we're talking $20 billion market cap from robots. Now, Tesla's already said that they're building this standalone Optimus factory at Giga Texas or California. They've already discontinued the model to repurpose that production for Optimus moving forward. So the target of 10 million units per year by 2027, and I know that's Elon time. Let's call it 29, maybe 2030. But even on Elon time, that trajectory is pointed only in one direction. And so here's what excites me most with Optimus, though. It's the margin profile. Once you crack that humanoids robots at scale, the marginal cost of each unit drops dramatically. You're talking about a product that could have 50, 60, maybe 70% gross margins once the manufacturing flywheel finally kicks in. So that's like software-like margins on a physical product. And that is what would justify these crazy multiples. The bear case Optimus, and it is a fair one, is that Gen 3 is still factory only. We haven't really seen Optimus doing real-world tasks outside of controlled environments just yet. Demos look great, but demos and commercial deployment are very different things. And so this is still a prove-it situation for Tesla. I think we all agree with that. The third layer is energy, right? And honestly, I think it's actually the most underrated part of Tesla's entire story. And I will have a new video coming out about energy specifically later. Last quarter, Tesla deployed, I think, like 14 gigawatt hours of energy storage, and that's massive. And the thing that people mostly miss here is that Tesla's energy business is actually growing faster than the EV business was at the same stage of its development today. So just think about that. The energy curve is actually steeper than the EV curve was. So Megapack is becoming a monster business, right? Utilities need grid scale storage as renewable energy adoption accelerates. And Tesla is one of the very few companies that can manufacture at the scale needed to meet this global demand. So this isn't speculative. This is revenue growing right now, today, and the margins on the energy storage are really, really healthy. So I don't think the thread actually assigns a specific value to the energy like it does to the other layers, but I think analysts have pegged it around like $1 to $3 trillion as a standalone business within the next 5 or 10 years. And I think most Tesla investors, honestly, are actually probably still sleeping on this one. The bear case I have to give, because I always try to be fair on the channel, and the biggest critique, and it is a good one, is that every single layer of this $100 trillion thesis requires execution that Tesla has not yet demonstrated at scale. So point one, FSD is still not commercially deployed as a fully unsupervised product, right? Like we are, close and done are very different, but until you have robotaxis operating in multiple cities with no safety driver at scale, should happen very soon, that 40 trillion robotaxi valuation is theoretical still. Point two, that Optimus Gen 3, being factory only. That's a big one, right? The jump from works in a factory to works in your home or works in your business is massive. And there still are real questions about the 10 million units per year by 2027, Elon time, let's say 2030, being realistic. And point three, competition, right? The Chinese market is ferocious here. And I think Tesla's advantage is AI and software, not just hardware. So you can't ignore that as the base layer, but it is under pressure. But I think it's actually a really good thing because competition, like without Apple, there would be no Samsung. Vice versa. Competition is what drives these capitalistic markets. So look, could all four of these layers compound on each other and get Tesla near the 100 trillion? Theoretically, yeah. I mean, even the math works out. Elon says so. But you need Optimus and Robotaxi and energy and the manufacturing flywheel all to execute at near the optimistic case. And so that's a lot of things going right in a short period of time as well. So my take as a long-term investor, I don't invest on the assumption that Tesla is going to get to 100 trillion, not in the next 5 years, 10 years, 20 years. I think we could talk about that. That's not my thesis. My thesis has always been 3 to 5 years out. And I think that within that window, taxi revenue starts showing up on the income statement massively. So Optimus goes from demos to early commercial deployment, and energy continues quarter over quarter, year over year to compound. And so even if 2 of these 4 layers start to materialize in a meaningful way, Tesla at $5 to $10 trillion is not crazy. And from where we sit at $1.5 trillion today, that's a 3 to 7x from here in the next, let's say, 3 to 5 years hold. For me, that's a really, really good return. And so what I love about actually Elon's response here is that he didn't hype it. He didn't say, oh yeah, easy, cats in the bag or whatever. He said staggeringly enormous amount of work and good luck needed. That's honest to me. And as someone who's been following Elon for years, he's actually been a lot more measured lately. Less funding secured energy and more like, here's the realistic path to get here. So the way I think about it is this: I don't need 100 trillion to be right. I just need the general direction to be correct. And every piece of evidence that I'm seeing, FSD getting better every update, unsupervised testing, Optimus going from concept to factory deployment, energy and deployment records there, the direction is correct. The question is just how fast and how far. And honestly, as a long-term shareholder, I know that the CEO, Elon, of a company if you have a CEO of a company and he sees the path to 100 trillion, even if he's just saying it with caveats, like that's the kind of asymmetric upside that gets me excited. And that's what I think investors get excited when they look at Elon, is that asymmetric upside. So that's my take on the $100 trillion thread. I'd love to know what you think. Are you buying that full case? Let me know in the comments. What layer are you most skeptical about? I'd love to have a debate, and feel free to challenge my thesis. Follow me on X at HeyIt'sYashu for more real-time Tesla takes in between videos. Hit subscribe on your way out. I'm catching you in the next one. Peace out.